Okay, so very quick update on the numbers that Talwalkars reported. They had about a 19% growth on the top line, profits growing by over 30%, around 33%, and stable margins at nearly 37%. Anant, Gawande, CFO of the company, is here with us. Anant, did you make a run to the studio, or did you sprint, or did you go to the gym in the morning?
I did, because people were doing their day-handy.
Okay.
I was behind on the traffic.
But run us through the quarter. It seems to be a good one for you.
Yeah, I mean, this is not exactly our best quarter, but even then, I think we are slightly ahead of what we felt. We have been guiding the market about 30-35% on a year-on-year basis. This time we are up about 40% on PAT after minority interest, and about 21% on top line. I think essentially it is probably a combination of valued product and getting some new members in during the first 3 months of the year, which is usually a illiquid period for getting members, because they are on the summer holidays, monsoons are just starting on, kids are still with their parents, so it's been a pretty good quarter.
You know, you spoke about maintaining the guidance around about 30-35% when we say on a year-on-year basis, but looking for FY13, when you talk from a full year point of view, what kind of guidance are you actually holding? That's one part of the question, and the other part being, what kind of demand are you actually seeing in some of the tier 2, tier 3 cities?
I'll first start with the demand in the tier 2, tier 3 cities. In the last 2 months, we opened, among several gyms, 2 gyms which I would like to refer to. One is Ajmer and the other is Ichalkaranji. This is a town 30 kilometers from Kolhapur. Ichalkaranji opened about 45 days back, I think, and we have already done about 325 members. Okay, I'm personally very surprised. I know it's a very rich town. Kolhapur is an extremely rich town, but to do in a tier 3, I don't know how you call this, tier 3, tier 4, whatever, 6 lakh population town, 325 members is a lot of members in the first 45 days. Ajmer has done 385 members in 1 month.
Right.
Now this is supposed to be a town which is centered around the Ajmer Dargah.
Okay.
But obviously there are people who can afford gymming and they want to go for gymming.
But Anant, let me ask you this. Fair enough. So numbers are looking very promising in tier 2 and tier 3. But when you talk about the Talwalkars full service gym, are your price points in tier 2, tier 3 slightly lower to get in the crowds? I'm trying to understand from a return point of view.
Sure.
Are tier 2, tier 3 gyms slightly less on the return compared to the metro cities?
My bottom-most pricing on gym in a tier 2, tier 3 is 15% lower than the Talwalkar gym in a metro. But my rent probably is about 30% lower. And my salary is 20% lower.
Right.
All right.
So I think it's essentially an idea where people in these towns, so it's a Guntur or a Kakinada, you actually end up probably getting a little higher margin. Also, we are not seeing any let up on demand in these smaller towns, because people there are in some way oblivious to what is happening at a macro level in the top 8 or 10 towns, and they pretty much know how to manage their food budget, etc. very properly.
Sure.
We get very elite customers there. In the main town we get a middle class customer.
So now let me ask you this, what is the Talwalkar strategy from here? I'll give you an example. So
Sure.
being a business journalist and someone who likes to be involved in fitness, I called up a New Form branch. A New Form is one of the new gyms that you're coming up
Sure.
with, which is supposed to be premium end, right? It was very interesting. The price points at this offering are substantially higher than a regular Talwalkar gym. Significantly higher. So what is your game plan? How much of your revenue you think you'll be able to trade up to the premium segment? How much will keep coming from your lower end segment, which is hi-fi, which I think is slightly lower than
That's
the
right.
actual Talwalkars?
For us, hi-fi, if I start with hi-fi first, is today's hi-fi is tomorrow's Talwalkar. We are trying to attack those 285 towns of India, which are Bharat versus India, as you use the nomenclature. In 5 to 7 years, these towns will become essentially ripe enough to become Talwalkar. So hi-fi is a franchise model, will add to my bottom line without disturbing my top line. So my margins will expand. If I come to the main company Talwalkar or the main product Talwalkar, if you divide the product into 3 parts, gym or gym related activities, which is the cardio and strength equipment, personal training, aerobic, okay, and weight loss. We have tried in the last 12 months to increase same store sales on 3 activities. Personal training by offering more and more personal training, aerobic through a Zumba.
Sure.
So we have 11 Zumba.
I get that. I get the breakup of the business. I'm just trying to understand from a revenue mix point of view. What percentage of revenue will be New Form, what percentage will be Talwalkars, and what percentage will be the entry point, hi-fi?
Weight loss, which is New Form, in both the diet food segment and the machine segment. I think over the next 3 to 4 years, will be about 15 to 18% of our turnover, and much more value added, much significantly more profit oriented.
As we're putting all this into perspective in terms of a guidance point of view, which I had asked you earlier also, what kind of guidance are you actually looking for FY13?
See, I would hold still the guidance at about 30-35% on profit. We always guided on profit, and I think that is critical. I think we are not still seeing any margin pressures.
Right.
This quarter the margins have been 33%, same as the same quarter last year. The reason we are guiding that is sometimes there is a slippage of gyms which opened between February, March into April, May of 2013. So taking that into account, I am guiding at this figure. I would be delighted if the economy turns upward and our guidance can move upward accordingly.
So then in that same context, what are the plans in terms of launches and in terms of strategy when we talk about both on the capex side as well as exploring new avenues?
So usually we will open most of our gyms, own gyms, between November and 15 November is Diwali.
Okay.
You would know all the festival figures. End of November to March, our capex figure should be about 65 crore, 65-70 crore, and we should be able to largely manage this through internal accrual.
All right, Anant, thanks so much for joining in. Happy gymming over the upcoming holidays.
Thank you.
We can only try to do the same, right, Priyank? Thanks so much, Anant.
Thank you. Alright, so that's some perspective coming from Talwalkars out there. That's the numbers, that's the way the stock's actually been trading. 2.6%, just marginally lower coming in as far as the counter is concerned today. It's time for a short break right now, but on the other side, we speak to Tarun Katyal, CEO of Reliance Broadcast Network, on the company's